Hello, this is Dale. In this video, what I'm going to be showing you is how we profited during the July 2020 earnings season that just finished up on Friday on Amazon and Google. At the end of this video, I'm going to have a thumbnail for you can click on, and it can go right into the video where I talk about how I made a rigorous study and determined what this strategy should be. But basically what we're doing is we are selling Iron Condors that we believe is further out of the money than the price will go after earnings. And for both Google and Amazon, we've determined that if we go from the current price 6% either above and below and set up our strike prices for the bear call and bull put, which is we use those to make up our Iron Condor, that brackets, and we profit with a very high percentage. So let me bring over a little spreadsheet that I use to help me set this up. We usually do this a day before earnings. Earnings was this day right here, which was July 30th. So on July 29th, what I do is put together this little spreadsheet where I write down the current price, which was $15.24 for Google. And then it automatically calculates 6%, a 6% move. And so for the strike price to sell my bull put, I'll set it up around 14.30, something like that. And I'll sell a call for my bear call right around 16.50. And this is basically taking the current price minus the 6% move to give me my strikes for the bull put, and then the current price plus the 6% move to give me my strikes for the bear call. So our trade then was the 31 July, and I usually put this on with very little time after earnings is announced. So the 31st would have been the day after 31 July. And what we did is we sold the 14.30 and bought the 14.20 put. This is the 14.30 and the 14.20 put for protection. And then for our bear call, we sold the 16.10 and bought the 16.20 for protection. So now we have our Iron Condor bracketing the price that Google has going into earnings. Now, the earnings, their earnings was after market on the 30th, and for Google, the estimate was about $8, and the earnings actually came in at $10, which was very good earnings. But a lot of times that has been discounted during this move here, and the market is kind of looking at where we're going to go in the future. And you can see that the day after earnings was announced, rather than going up, Google dropped and then gained it back towards the end of the day, but stayed well within the brackets the whole time. So the $2.65 credit, we were able to capture that full amount by just letting this Iron Condor expire. You say, well, $2.65. That's $265 per one contract. If you had 10 contracts, we're talking $2,650. So it's a very, very profitable, consistent, conservative trade that I use every earnings season. I just started putting this out to my members last April. That was the first time we did it. and we were 6 for 6, 6 for 6. I've kind of just pared it down to for this video for Google and Amazon, and both those were extremely profitable. So the credit here of $2.65 or $265 per contract, that's 26.5% of margin in 2 days, which is unbelievable, unbelievable. So let's take a look then at Amazon. Amazon actually was very interesting. Let me bring up the little spreadsheet for Amazon. The current price when I set this up on Wednesday, the 29th, July 29th, was 3,028. So here's 6% of the move. This is a strike price we want to sell for our bull put. This is a strike price we want to sell for our bear call. Going out as close as we can. So the 31 July, selling the 28.45 and buying the 28.35 for protection on our bull put. And then on our bear call, it was selling the 32.10 and buying the 32.20 for protection. Okay, so interesting day because Amazon actually blew the earnings projection out of the water. They had estimated, I think the estimation was about $2 a share. They came in at $10 a share. So we knew that in after hours trading, it was going to be up around our bear call position. So I wanted to watch this closely. So let's take a look at a chart that gives us a little bit more information, a little closer, and that's looking at the 30-minute chart. And you can see that after earnings that oh, there you go. They estimated $1.74. It came in at actually $10.30. You can see it opened way up here. And then the reason I held on to this is because it kept dropping and dropping and dropping, and it dropped all day long. It was a little tight right around here, but we were making money. And as long as we were making money, I was going to stay in, and I just watched this, watch this, watch this, and it finally closed below where we had our bear call, well above the bull put. So we were able to capture all of the $3.82 by letting this expire. That is 38.2% in 2 days, which you know, like I said earlier, is just unbelievable. So if we look at the results of both these, both Google and Amazon are higher price stocks, which I like because they have decent open interest and which gives you liquidity to get in and get out of your Iron Condor. And they have very nice credits. Usually when we set up the Iron Condor, you're going to get very close to a 1-to-1 risk reward ratio, which is very nice. Now this was like a 1 to 4, I guess, and this is like a 1 to 3.5, so or even closer to that. But you can see that on 10 contracts with Alphabet, you would have profited $26.50, and for Amazon, you would have profited $38.20. Now, the historical research, the reason why we set this up at 6% is that the historical research showed that for the last 4 years, 11 out of the 16 times, if you were below, if you set up the bracket for the Iron Condor plus or minus 6%, you would have been profitable 69%. For Amazon, using that 6% number, you would have been 12 for 16 or 75%. If you have a an Iron Condor that has an approximate risk to reward ratio of 1-to-1, and you've got probability of success around 70-75%, you've got a profitable strategy that you can just use time and time again. Now, what I'd like you to do is I'm gonna bring up the thumbnail for the YouTube video that I did describing the historical research that I did on 6 different stocks, not only Amazon, Google, but Chipotle Mexican Grill, and 3 others that are relatively higher price stocks. So I'll be showing you that. You can just click on that. The other thing is you'll see a green circle with a D in it. If you click on that green circle, you become a subscriber to my YouTube channel, which doesn't cost you anything, and you'll be able to view. Currently I've got 36 educational videos on there. A lot of them describing exactly how I trade. A lot of them showing you how I get in, how I get out. So I hope you join me. I hope you enjoyed this video, and ultimately I'd love to have you as a member. My website is www.optionsinfinity.com, and there's a lot of educational information on there also. Again, that is www.optionsinfinity.com. Bye-bye now.